Hello, everyone. Hope you're having a great Wednesday today, and thanks for joining us to this educational presentation put on by Specialist Trading and Pro Trader Strategies. Now, today, I'd like to talk to you about kicking your trading into overdrive. I'm going to share with you two simple steps that you can do that will get you onto that process of actually kicking your trading into overdrive. You're going to see how simple these two steps are. Most of you, after you see it, will say, well, it really can't be true. It's too simple, but you're going to be astonished by looking at a lot of current and recent trades and examples I'll be sharing with you to show you how simple it is to actually really take your trading into overdrive. But first, let's look at this chart. This is an FSLY. This is a pretty recent chart, just going back about a month, 3 weeks to a month ago. Now, someone would looking at this normally would say there's actually nothing happening here, and if anything, we're in a range market, right? Kind of go up, kind of go down, nothing's happening. And still some would say, well, Steve, I like to follow what the institutions do. Those are those big money managers, the big institutions with a lot of capital, a lot of the banks behind them. So I think this is resistance. This is probably where they're selling and they have a lot of sell orders. Well, we don't follow any of these things at Specialist Trading because they really don't show any levels of consistency. The only thing we follow is what the market is telling us. And according to these two simple steps, the market was actually telling us to buy right here. How could one say to buy there when two other techniques were telling you that you were in a range market? Another one was telling you you were standing in the way of resistance. Well, the proof is in the pudding, as you saw later on coming into this second week of July. The stock was actually up 55 points. Now, not only did these two simple steps, which I'm going to share and teach you today, generate a buy signal right at the bottom, but they also, if you missed them, they gave you another one right here where you could have taken advantage of that, and then still another one where you still could have taken advantage of a nice little swing to the upside. The beauty of this is that everything is already right here on our platform, the PTS Primo Charting Platform. This is the educational platform and tool that can actually help you kick your trading into overdrive. So welcome once again. My name is Steven Primo. I'm the president and founder of Specialist Trading. I've been trading for a total of 43 years now. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 11 years, and 9 of those years I was a specialist. Specialist isn't any different or special than any other trader. It just means that they specialized in making markets. In the old days, you had to get a floor broker, walk up to the trader who specialized in making a market, and he would either buy or sell from that specialist. So I was a specialist. I made markets during the crash of '87 and the bull market that followed. And in my 43 years of trading, I've seen just about everything you can think of, everything imaginable. If you've been trading some far out new system or method or technique or indicator that no one's ever heard of, trust me, it's been around before. It's just been rebranded. So in my 43 years, I know what works and I know what doesn't work. So this is our goal at Specialist Trading. We simply teach our students around the world all the things that have shown high levels of consistency, tips and techniques that I've accumulated in my 4 decades plus of trading. So this is what we do with all of our students, and you'll see my attention to detail and really trying to educate you today in today's free presentation. But before we present all the information I'm going to be sharing with you today, we are required first to show you this. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this 2 steps and this technique that I'm going to be sharing with you today. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated. And also please remember that all examples are strictly for educational purposes only. Now, we have a good crowd here today. If you haven't done so already, please feel free to follow us on Twitter. I'm inviting you all to follow us. There's our handle right there. You may want to copy that down. Every day I post different information, anywhere from bits of financial wisdom to signals our strategies have currently generated, a lot of stocks, current signals. So please feel free to follow us on Twitter. Lots of great free educational information on a daily basis. Now remember, once again, we are first and foremost an educational company. That's what separates us from the other webinars you may have attended in the past. You know, think of it. You go to a webinar, and most of the time what they'll do is they'll string you along, and they'll tell you about some great system or some great tool or indicator they have or what they think the market's going to do. And then at the very end, they leave you in the dark where you actually don't have any idea how they came to this conclusion. You don't understand how it works. And in order to find out, you've got to spend about $5,000 or $10,000. Well, we don't believe in that. We always try to leave you something that you can learn and grow with in our presentations, even if you don't become a specialist member, a specialist trading member of ours. And that's why we are first and foremost an educational company only. So as you can see here, my goal is not to force feed you signals. My goal is not to tell you what I think the market's going to do. My goal is not to tell you what the perfect time frame is. My goal is simply to teach you how to trade with the specialist edge, the same edge that was taught to me some 4 decades ago and what has sustained me, and hopefully it will be able to sustain you. And we have students in over 115 countries around the world and in every state in the United States that are using the specialist edge for trading. The specialist edge is rooted in simplicity. That's the way you become a consistent trader, not by piling on more and more inconsistent methods to your trading plan, but by really doing the opposite, by stripping away all of what these things my mentors used to call useless noise, so that ultimately your trading plan is extremely simple and it only listens to one thing, the chart in front of you. That is the specialist edge, okay? Now, this is going to be an educational presentation. I want to take each and every one of your questions if you happen to have them. But please, if you do have a question, wait till the end to ask. I promise I'll get to each and every one of them. The only question I will answer right now is this being recorded? Yes, it is. So if you're having technical issues or if you have to leave early, don't worry. I will send each and every one of you a link to this recording. Okay, so if you happen to have a question at each and every slide, please try to remember them or write them down, and I promise I'll get to them at the very end of today's class. Okay, so I want to start out with what I learned trading on the floor of the exchange, okay? Because remember, I started roughly 43 years ago. I was doing the same things that the majority of most traders do, following the news, trying to track the institutions to see what they're doing, watching for the earnings reports to come out, listening to the jobless claims. Most traders today are probably doing the same things I was doing 4 decades ago. But trust me, they didn't work for me 4 decades ago. In fact, I struggled tremendously my first year, even though I was on the floor of the exchange. I was lucky enough to have some mentors that taught me the same things I teach to my students. And here's one of the first things that they taught me. They said, believe it or not, the main purpose to trading is not to make money. Now think about that. We've all been taught, well, wait a minute, the only reason I'm trading is to make money. I want to make a little bit on the side, supplemental income, or maybe I want to retire. But how can the main purpose of trading not to be to make money? Well, here's what they said. The main purpose of trading is actually to be in sync with whatever market you're trading. Therefore, making or losing money is simply the result or byproduct of that process. You see, we do everything backwards. We want to make money, so that's what we think. We search for that holy grail. We search for that system that has the best results, the best back-tested results, never fails, makes so much a month. Well, we're guaranteed to make $5,000 a month. We only spend $20,000 for the system. See, we're doing things opposite, which actually we should be doing this first. We should be searching for something that gets us in sync with whatever we're trading. That's the market. And if we're in sync, then over time, the result will be profits or money. So that should be our main purpose, our main goal, not to make money, but to be in sync with whatever market we're trading. Think of the markets as a river, okay? If you want to get from point A to point B, you want to be on that river and you want the river to take you down that direction with the current. You don't want to swim against the river or against the current of the river. It's the same thing with trading. You want to be in sync with whatever you're trading. The result will be you'll get to where you want to get a lot faster and simpler, and you'll sleep a lot better at night. So the purpose is to be in sync, not to make money. Making money is simply the result or the byproduct of being in sync with that process, okay? So how do we become in sync with the market? Here's the best tool I know of by getting in sync, and that's by using the PET-D. This is something I was introduced to some 4 decades ago on the floor of the stock exchange. Now, we had to apply it differently at the time. It had a different name. Actually, we used to call it the formula because we had to calculate it almost on a tick-by-tick basis. So it was very difficult to use and apply intraday. We could only use it at the end of the day because it was just so difficult. By the time you figured out what the formula was, it was time to move on to the next bar. But with the luck of high-speed computers and with programmers that we have, we were able to formulate this. So let me share with you how we use it. We formulated it into a color bar algorithm, okay? We're keeping the proprietary formula in-house, but that's okay because we made it simple, and all you need to know is how to follow the color bar system. So if you see a series of green bars, the PET-D is telling you that the overall trend is up. That's how simple it is. And if you see a series of red bars, the PET-D is telling you the overall trend is down. Now, some of you can say, well, Steve, I already see those on candlesticks. I see up green bars and down red bars. Yes, that's true, but look at these bars right here. This was an up day because we opened and closed higher. This is another up day. We opened and closed higher, followed by another up day. We opened and closed higher. But look at the outline of the bar. They're all colored red. So what is the PET-D telling us? It's telling us that even though these bars closed up, they should not be colored green because they're just up days in an overall downtrend, okay? If I backtrack here and look at these green bars, we see here that we have a down day. We have another down day back here. We have another down day, but they're colored green. So what is that telling us? It's telling us that they're just down days in an overall uptrend. So you shouldn't be looking at these as a trend change. You should be looking at these as almost as buying opportunities. Think of it this way. Think of the summer, which we're in right now, right? Now, we're in the middle of July. We're starting to get warm and hot. But think of August. August is where it really gets hot, especially where I am in the West Coast, okay? Now, every once in a while, in the middle of the summer, you have one of these days where all of a sudden the fog comes in and it's only 65, 70 degrees. And you're saying, wow, is summer ending? Is summer over? Because this is really abnormal. Just the other day it was 85, 90 degrees, and now it's like 65, 70. No, this is just a one-day little blip before we go right back up to 90 and 100 degrees. That's the same way you're looking at these green bars. When you have a down day, but it's colored green, it's not telling you that the trend has changed. Just the same way in the middle of summer, when we're 65, 70 degrees, it doesn't tell you that summer is over. It's just telling you that you have one day aberration, and that's actually just 1 or 2 days before it goes right back up. The same way in this situation with the red bars. Every once in a while, in the middle of winter, you'll have a couple of days where it's 80, 85 degrees, and you'll say to yourself, wow, is winter already over in the middle of December? No, it just means that you have a couple of warm days, and quickly they will be followed by the cool 55, 40 degree temperatures again, okay? It's the same way with these bars. Even though you have some up days, if they're outlined red, the trend is still down. That's the beauty and the sensitivity of the PET-D. So even though we had these bounces here, the PET-D was still telling us these are selling opportunities. Don't get locked in. Don't get fooled by thinking the trend has changed. And as you can see, it didn't. Now, the PET-D is not a system nor a strategy. So in other words, it's not something that gives you buy and sell rules, gives you exit rules, gives you stop placement. But it's a unique color bar tool based on momentum that is designed to show you on a tick-by-tick basis when a trend has most likely begun. So it's extremely sensitive, but please remember, this is where most students have difficulty. They think it's a strategy. It's not. It's simply a unique color bar tool based on momentum, okay? Now, look at this older example here in Aetna. As we can see, the stock went straight up and then it went straight down. This is how most traders lose money because once again, you're focusing on trying to make money when you're out of sync with whatever you're trading. How could we have been in sync with this? Well, we simply apply the PET-D on our platform. It's as simple as clicking on the PET-D tab, and the colors automatically change. Now, remember, green bars tell us that we're in an uptrend. Red bars tell us we're in a downtrend. We would have known well in advance, right back here, that we were going higher because the bars were green. And we would have known well in advance that we were going lower because the bars changed red. Now, remember, the PET-D is not designed to get you out at the top or get you in at the bottom. It's just designed as an early trend detector, better than any other thing I've used in 40 years that tells me when the trend is about to change. So this is a really sensitive tool because it can tell us well in advance, but that's the beauty of it. It tells you which direction you should be trading. And once you know the direction, well, think of the edge you have now. You can apply any strategy, any technique, or any method to that direction. Remember, just the way my mentors taught me, the secret to trading is not about making money, it's in being in sync with whatever you're trading. If you're in sync, well, naturally the results will be profitable, most likely. All right, so let's talk about some of the advantages of using the PET-D. Firstly, it gives you the security of trading in sync with the current trend. Remember, that's the basis, that's the guideline for today's presentation. As we look at this chart here in AJRD, once again, it's obvious we're in a downtrend, right? But once we applied the PET-D, what do we have here? Even though we've still been going down and it looks like we're kind of going sideways, we had three, green bars right here. So what you usually look for is 3 to 5 bars of a different color to tell you that the trend has changed. So right here, we knew that most likely, not guaranteed, but most likely the trend was changing to the upside. And then look what happened, okay? Same thing works to the downside here. Now in AE, we had the majority of the bars were green. Sure, we had one red, but not enough to tell us that the trend has changed. Remember, we need 3 to 5 red bars now. And then look what happens. Right here, we had 3 red bars, okay? So even though it looks like the market is just kind of in a holding pattern, what's the PET-D telling us? It's telling us that most likely we're going to go lower. And look what happened after that, a very extreme downtrend. Now, the PET-D can also be applied as a stop placement method. Now think of that. This is one of the other techniques you can use with this. For example, here's a buy signal using one of our strategies right here, and you have a really nice profit. Let's say you took some profits, you sold half your position and made a nice gain here, but you want to let the rest run, okay? How can you use a stop placement with the PET-D? Well, with the first red bar you see, you want to place your stop just below that, okay? And as you can see here, it went up for about a little bit, but then went below. So now you're stopped out. So you would have made a small profit on the second portion, but it got out of most of your profit here. At this time, you would have said, well, gosh, I could have sold everything up here. But looking back in hindsight, aren't you glad you got out of the entire position? Same thing works going short. Now here's a sell signal. One of our strategies would have generated a sell signal. Let's say you took profits here on half of your position and just wanted to see if it was going to go lower, so you let the remainder of your position ride by using the stop placement with the PET-D. Well, on the first green bar you see, you want to place your stop just above that, okay? So if it trades above there, you're going to exit the position entirely. And you did, and look at what that would have saved you. Had you held on, you would have turned that into a loss. So this is another great advantage of using the PET-D as a stop placement. But the third, and I think most important way, is that it supplies you with numerous trading techniques that are based on the color bars. Now you notice I say it doesn't supply you with numerous trading strategies or numerous trading systems. It supplies you with techniques. Now techniques are just one piece of the puzzle that go into making a strategy or a system. So I want to share with you trading technique A. This is an extremely simple but powerful trading technique that you can start using right away, but you must have the PET-D in order to incorporate it. But I'll share with you the format for it so you can see just how powerful this is. All right, here are the requirements. Obviously, you need the PET-D, but you also need to apply an inside day bar pattern. Now, if you're not familiar with what an inside day bar pattern is, it's a 2-bar pattern, as we see, bar number 1 and bar number 2. Now, how do we come up with the inside day? Well, what you want to do is take the range. That's the high to the low of bar number 1, okay? Right here, see that? That's the range. Not from the open or close, but just the extreme low and the extreme high. And bar number 2's range should fall in somewhere in that range of bar number 1. It should be inside. So the high should be lower and the low should be higher. So the range is inside. This will give us an inside day, okay? Now this can be calculated on a 5-minute time frame. It can be calculated on a weekly bar. It makes no difference. So don't get fooled by the title called inside day. It can be an inside 5-minute bar, or it can be an inside weekly bar or monthly bar. It makes no difference. The same pattern applies, okay? This has been around for ages, and it's an extremely simple but powerful tool. Now, here's a slight alteration. Many times, you'll see bar number 2 have the exact same high as bar number 1 and the exact same low as bar number 2. This will still qualify as an inside day. So it can either be both the high and the low are equal, or just one of these is equal to the previous days. Okay, that still qualifies as an inside day. All right, so now that we've come to conclude what the definition of an inside day pattern is, here is the setup, okay? Here's the buy pattern. What you want to look for is both bars of an inside day pattern to be colored green. And what you're going to do is buy when price trades one tick or one pip, let's say you're trading currency pairs, above the inside day's high or bar number 2 high, okay? Let me show you what I mean here. All right, so if this is an inside day, what you want to find is that both of these bars are colored green by the pet D. It doesn't matter what the bars were before. It makes no difference. It just has to be these 2 bars, bar number 1 and bar number 2. If you see that both of these bars are colored green, then you want to enter one tick above the high of bar number 2. That's it. Doesn't have to close above there. It just needs to trade there, okay? Let's say we want to go short. Well, we're going to do the same with inside day bar pattern to go short. But now both bars of the inside day pattern need to be colored red by the pet D. Doesn't matter what the bars before were colored. They could all be green. But you want these bars to be colored red. And we're going to sell when price trades one tick or one pip below the low of the inside day pattern or bar number 2. So remember, here's the inside day. We now need both of these bars to be colored red by the pet D. If we have that, then we want to go short when price trades one tick below this bar here. That's it. Simple, right? Let me show you how powerful this technique is by sharing with you some recent technique examples. Okay, here's that first chart we shared with you with the opening of today's presentation, right? Remember, it looked as if we were going nowhere. Some of you may have thought, well, Steve, this is resistance or it's a range bar. There's absolutely nothing happening. So why would I want to get involved in this stock? It's just going sideways. I'm going to wait for a breakout, or I'm going to wait for the earnings to come out, or I'm going to go to that chat room and I'm going to wait to see what the head of the chat room tells me what I should be doing, right? This is the way most traders trade. They wait for something or someone to tell them what to do. In my experience, that's one of the main reasons why most traders fail. Because you're not making your own decision. You're letting somebody or someone else trade for you. That is a recipe for a disaster. You should never let anyone decide what you're going to be doing with your hard-earned money. You should be making that choice. Never let anyone tell you how to trade. You should let someone teach you what has worked in the past, but ultimately you make your decision as to how you want to apply those to your trading. So that's what we teach our students. We teach them techniques, methods, and strategies. It's up to them if they want to use them or not and how they want to use them. So rather than say, okay, this must be what the institutions are doing, there's major resistance here, what is the market telling you? Remember, our job is simply to be in sync with the market. The way we do that is by applying the pet D. All right? So what do we want to do? On our platform, we made it simple. You don't have to figure anything out. You don't have to calculate it the way I did some 4 decades ago on the floor. You simply have to click on Pet D and the colors automatically change. So now that you see all the bars are colored green, not the institutions, not some guy in a webinar, not some guy in a chat room, not the earnings reports, but what is the market telling you? The very source of what you're trading. It's telling you it wants to go higher. It's telling you the trend is up. So our job is to be in sync, right? So we only want to be a buyer. We don't care if they're saying the earnings are going to be bad or if they're saying the institutions are selling. We want to be a buyer. Now that we've learned this inside day pattern technique, well, what do we have here? We have an inside day right there. So remember, we want to buy once price trades one tick above bar number 2. Look what happened. That's how you could have gained 55 points. You see how simple trading is when you strip away all of this, what my mentors called useless noise, and you only listen to one thing, the market, the chart you're trading. Because after all, remember, that's the source. Why would you listen to anything else? Just listen to the source and you'll get closer to becoming a consistent trader. Now, as you see here, it gave you that really nice technique set up right there at the bottom. What if you missed it? Well, that's the beauty of this technique, because if you miss it, many times there are more being generated along the way. These are both inside day patterns you could have taken advantage of. All right, let's look at another example here in MSGS, Madison Square Garden. All right, someone looking at this would say, well, Steve, we've been coming down for a while, but that chat room I go to says that this is tremendously oversold. I mean, they have a proprietary tool that knows when things are too low or things are too high, okay? Now, what's it based on? I don't know, but it's a really great tool. It tells me the bottom and tells me the top. So we're just going to listen to that. Remember, we just want to be in sync with the market. That's the only thing we care about. We're not caring about when someone is telling us when to buy or sell. We don't take our cue from anyone else. But if something is telling us what the market wants to do, well, obviously we want to listen, and that's the pet D. Now, obviously someone would say, well, Steve, this is major support. Look at this. Well, what's the pet D telling us? Because when we click that on, it's telling us the market wants to go lower. That's all it's telling us. It's saying, listen, I'm translating through the color bars that I want to go lower. So all you have to do is be in sync with the market. So now that we know it wants to go lower, we look for this 2-bar pattern. Bar number 1, bar number 2, both colored red. So that's a sell setup. Now, if you want to enter, here's our entry point, 1 tick below. Where you place your stop and where you want to exit is entirely up to you. Remember, we're just sharing with you one piece of the puzzle. This is not a strategy, because a strategy would tell you exactly where to enter. A strategy would tell you exactly where to exit, and it would tell you exactly where to place your stop. It would also give you money management references points. It would also tell you how many shares or contracts to buy or sell. It would also tell you how to track the trade, trail the trade. That's a strategy. This is not a strategy. It's a technique, meaning it's one piece of the puzzle that makes up a strategy, which is the setup. All right, so let's just say we'd use this and we knew where we wanted to place our stop and where we wanted to place our individual exit. Well, that's a quick 11 points in about 4 days you could have taken advantage of. Here's another example in SWBI, okay? Looks like the market went straight up. Most traders would say, well, it's probably taking a rest. It's going to come down here. I'll wait till it comes down lower. But the market's telling you it wants to go higher, and it's setting up for a inside day buy pattern, 10 points coming into the first week of July. And if you missed that one, look at all the other setups the market was flashing for you to get involved with if you wanted to do so. See, the market should never be looked upon as an adversary, as something you have to fight. The market actually is your best friend. It's giving you all this, notices and all these announcements telling you, I want to go higher, telling you you should be buying right here, telling you this is now a trend change. But for some reason, we never listen to this. We never listen to our friend. We always listen to some guy in a chat room, some guy on TV. We always wait to listen for the earnings reports. Learn to listen to the market, and you'll become consistent that much quicker. Here's an example in DDOG, okay? The market was going up. We have our inside day pattern, 57 points coming into July. Now, remember, this setup was first given to you in April. This is when the markets really hadn't decided yet if they were going higher or not, but how come the pet D had already shown that this was going higher? Because it colored all the bars green. And look at all the chances you had to get in if you missed that first setup. The market is always giving you more chances to be in sync with it. How about KOD? Okay, just looking off these 2 bars alone, here's a perfect sell setup using this technique. Bar 1 and bar 2 are both colored red. We just want to go short if we trade 1 tick below here, which we could have done on the very next bar, 12 points coming into the first week of July, okay? How about this example in Zoom, all right? This was in June, the first week of June, all right? We have all the bars green. We have an inside day pattern. We could have gone long 1 tick above, and that was 68 points coming into this last week in July. If we missed that, look at all the other examples that we could have gotten in later on. Here's one in Apple. This is going back to May when, once again, the market still wasn't sure whether it was going to go up or go down. It was starting to bounce a bit, but not enough to convince us that the market was really going higher. But if we looked at our translator, which is the pet D was telling us the market, Apple, wanted to go higher. Here was an inside day pattern. So if you wanted to use this technique back in the first week of May, you could have purchased Apple and potentially captured 92 points coming into this week if you wanted to. You could have taken a couple of points and said thank you. You could have taken maybe 10 points, but if you wanted to hang on, potentially you could have still made 92 points. Remember, you are in charge of your own trading, not us. We never tell our students what to buy. We never tell them what the perfect time frame is. We never tell them where to exit. We never tell them where to place their stop. What we do provide you with are upwards of 6 or 7 ways to implement these choices, 6 or 7 different exit methods, 6 or 7 different entry points, 6 or 7 different stop placement methods. It's up to you to decide which one you want. Here's another example in EHTH. The bar was originally green, but then we switched over into a downtrend. Now, where most people would have thought, well, Steve, this is a reversal. You got to go long here. Well, all the bars are still red. Excuse me. So we look for this inside day pattern, which we have here. And then look what happened. We would have gone short 1 tick below, but it didn't trade. But look what happened. We have another inside day pattern overlapping. We never went short 1 tick below because we had another overlapping inside day pattern. This is an extremely powerful setup when you see these inside days within inside days. Look what happened, 19 points coming into July, okay? If you missed that, the market still gave you another chance to get in right here. As we look at DOCU, this once again was in April coming into May. Didn't look like the stock was really doing anything, right? But all of the bars were green. So even though it's basically going sideways, what is our translator telling us? It's telling us that it wanted to go higher because all the bars were green. So once it gives us that information, our job is simply to be in sync with it and look for buy setups, which we had back here in the middle of April to go long DOCU, roughly about, I would say, about the 102 level, 102, 103. Now look what happened after you could have purchased that. Stock is now trading in the 200s. And you could have potentially made over 110 points in the next 3 months. Now, remember, not to worry. If you missed that setup, it gave you a lot more chances to get back in. Here's an example in BIIB, 2 red bars. This is a sell setup according to this particular technique. We could have gone short right here in the middle of June, 35 points coming into July, okay? You see, even when the market's going up, there are lots of examples where you can go short. So you can trade each thing individually. You don't have to follow what all the rest of the markets are doing. If your stock or whatever market you're following flashes a sell signal and the rest of the market is going higher, that's okay. You can still trade that, but it's your choice. All right, let's look at this example in Tesla. This is the way most traders trade. They say, well, Steve, listen, I know you say you got to be in sync with the trend. But wow, I mean, this thing is so overbought. I cannot buy it up here. In fact, what do we have? This formation, I'm a candlestick trader, and this is an evening star pattern, extremely bearish. So I'm sorry, I cannot get in sync. Even though it's going up, I cannot be a buyer here. In fact, I'm going to be a seller. It's just way too high. And that chat room, that trading room I go to is shorting a lot of Tesla. So I cannot buy this. Okay, so let's see how this worked out. This was on the 10th, just last week, last Friday. How did that work out going short? Doesn't look like a lot, right? But that was roughly about, wow, that was a good 150 points that you most likely would have lost. How could the method I'm teaching you today have helped you in this scenario? Well, the first thing is you want to be in sync with the market. Remember I told you the purpose of trading is not to make money. Purpose of trading is to be in sync and learn how to be in sync with the river, with whatever you're trading. So how do we do that? We use our translator that tells us what the market wants to do. That's the PET-D. So on our platform, we made it simple. All you have to do is click on PET-D and it colors the bars for you. So what are the colors of the bars? They're all outlined green. So therefore, you would have never have sold. That's like swimming upstream. Why would you want to do that? But we're always taught to buy low and sell high, right? No, what you want to do is buy high and sell higher. So once we knew that the bars were green, what we could have done is found this inside day pattern right here and gone long where everyone else was selling and made a quick 140 points in the next day. Sure, you could have bought the calls. You could have bought maybe 1 or 2 shares. We realized not everyone can buy a $1,400 stock. I know I probably wouldn't have, but I'm just trying to share with you how this can be applied to inexpensive stocks as well as expensive stocks. Here's another example. This is the QQQs, the ETFs that represent the NASDAQ 100. This is how you can use this to determine what the market's doing. A lot of our students don't really trade this, but they'll use it as a market directional tool. In other words, if you're getting a sell signal in the QQQs using this technique, doesn't it stand to reason that the market's going to go lower? So as we see here, the sell signal was generated. It went down for a couple of days, then firmed back up. But look what happened. All of the bars are still red. So what is the market telling us? It's telling us that even though it's bounced up a little bit, the market still wants to go lower. And at the same time, we have another inside day pattern. So you had a second chance to get short if you wanted to. And that would ultimately be the right thing to do because the market ultimately fell out of bed, as we all know what happened in March. And the QQQs in roughly about 3 weeks fell 50 points. Now, if that doesn't seem like a lot for you, or if you were using this as a market directional tool, that transferred over onto 8,600 Dow Jones points. So see how this could have helped you simply by applying it to determine what the market may be doing, not actually by trading it. All right, so let's look at some other markets real quickly because I know we showed mainly stocks here, but I just want to share with you that this can be applied to virtually any market and any time frame. It does not have to be anything compared with stocks only, all right? And then we'll go into question and answers after this. All right, let's look at the EMini SP. This is where I like to use it. In fact, I traded it today using this technique and had a really nice trade to the downside when the market started to go lower using this technique. But let me share with you how this could have been applied. This was on the 10th, last Friday, all right? Someone looking at this would say, well, okay, on this 10-minute chart of the E-mini futures, we're going up, but look, it looks like the trend has changed, so we're starting to go lower. I'm going to sell. We have a bearish engulfing pattern right here. But what is the market telling us? Not, what some outdated, inconsistent pattern is telling us. What's the market telling us? Once we apply the PET-D, it's telling us that we have 2 down bars in an uptrend. Remember, that's like having a couple of cold days in the middle of summer, in the middle of July or August. Does that tell you that summer is over? No, it's just an aberration for 1 or 2 days. Most likely, we're going to be right back up to 100 degrees in the next week. It's the same thing with having 2 down days or 2 down bars as we see here. They're both colored green. These are actually buying opportunities. Now, if we use this technique, what do we have? We have an inside day pattern right here. Even though this is a 10-minute chart, this is giving you an opportunity to go long, 1 tick above bar number 2 right here. So as we see here, this was roughly about 9:30, 10 a.m. last Friday. Look what happened. What happened to the 2 down days, okay, or 2 down bars? Well, the market was telling us that those are buying opportunities. And potentially you could have captured 28 points or $1,400 per contract if you decided to stay in. Now, once again, the beauty of this technique is that if you miss that, there are lots of other opportunities to get back in. Here's an example in the Forex markets, okay? We know we have a lot of Forex traders that are students of ours around the world. Here's an example in the British pound New Zealand dollar. Looks like the market had gone down lower, but perhaps you think it's oversold. Maybe it's gone down too much. But if you apply the PET-D, you see that all the bars still remain red. So the market is telling us, not some guy in some webinar across the world, or across the pond, or not some guy in some chat room. The market is telling us it wants to go lower. So who are we to stand in front of it? Our job as a trader is to be in sync. So if we want to be in sync, we can apply this method because what do we have here? The 2-bar inside day pattern. Now, if we want to go short the British pound on this daily bar, we just simply go short 1 tick below here, and you would have gone short. And even though the next couple of days, it looks like you have a loss here, that's okay. Let's say you place your stop here, which is one of our stop points, you still would have been in the trade. And if you got stopped out, don't worry. You could have got right back in again, right back in again, right back in again, right back in again, and still made back what you lost. This is what we mean by consistency, a 2-step forward, 1-step back approach. So even though when you may have had a minor loss, you still have plenty of opportunity to make it back, sometimes on the very next trade. Okay, let us recap. Remember, this was a simple trading technique, not a strategy, not a system, but a technique that applies the PET-D, and it pinpoints quick momentum moves in any direction, in any time frame, and one thing I left out here, in any market. As you just saw, we applied it to the E-mini futures as well as the currency pairs. You can apply this to Bitcoin. You can apply it to commodities. It makes absolutely no difference. So ask yourself, do you think this tool can help your trading for the remainder of 2020? Think of all these examples I just gave you. Many of these happened within the last month and had tremendous, tremendous profits. Some of them, like the EMini one, happened in the last week. Do you think this tool could help you going forward for the remainder of 2020? I think your answer is yes. So because of that, we have a great discount for all of you today. We're going to offer you the Pet D. This is our roadmap for any market special. You're going to get the full course, the proprietary color bar algorithm. This includes the add-ons that you can apply to your platform. Let's say you have TradeStation, Metastock, Sierra Charts, MT4. You can apply the Pet D and be able to have it right there on your platform. This also comes with the course. You'll get the online class, which teaches you 2 more continuation trading techniques, 2 more pullback trading techniques, as well as the trailing stop technique. Remember, you can apply this to any market and any time frame. This is a great, great offer here. Just being able to apply the Pet D to your trading. I have used the Pet D almost every day now in my trading for the last 4 decades. But we're not going to stop here with this great offer today. We're also going to throw in our Primo charts, the PTS Primo Platform charts. For today only, we're offering you 12 months, a full year free. So that, therefore, I mean, we make it simple. Everything is one click away. All you have to do is click on the Pet D and it automatically changes the colors for you. This is how great this is today, because if you take advantage of this today only, you'll get a full year free of the platform. Now, you're not going to just get the Pet D and then the platform and say, wow, this is all I get on the platform. You get a lot more things, such as our one-click Pet D access, along with the buy-sell line. This is our overall trend identifier, along with our strength of trend tool, which can tell you with an uncanny, just an uncanny feel sometimes when a market is running out of steam or whether it has more gas left in the tank to go higher or lower. You'll also get a signal scanner. You can scan on a nightly basis for all of the green Pet D stocks or all of the red Pet D stocks. You can do this every night. You can do it on the futures, on the currency pairs, on the ETFs, on all the indices, major markets within the foreign exchanges, all right, the Asian markets. Over 90 of the most prominent technical indicators, along with our auto-generated exit signals. This is a great, great tool. If you want to make a technique more of a strategy, we have an auto-generated exit technique on the platform, just one click away. And this all comes with personalized tech support. And this is just the tip of the iceberg. There are so many other things already on the platform that we just don't have time to mention that come with this 12 months of free usage. Now, I know a lot of you are saying, well, you know, okay, but I really don't need this, Steve. You know, what you taught me today is great. I've never really known how easy it is to apply this technique, but I don't really need the Pet D. If I know I'm in an uptrend, it's easy to see if I'm in an uptrend. So all I have to do is look for that inside day pattern, right? I don't need the Pet D. Well, all right, with that thinking, let's see how someone would have used that technique and that way of thinking with this chart of Facebook, okay? Now, someone would have looked at this and said, wait a minute, I don't need the Pet D to tell me we're in an uptrend. Look at this. We're going higher. We have higher highs. We have higher lows. And what do I have here? I have an inside day pattern. So I'm going to buy one tick above. Or in fact, you know what? I'm not even going to wait. I'm just going to buy at the market. I don't need to follow those rules that Steve taught us today. All I need to do is find out where the inside day patterns are in an uptrend. So let's say you did that. You bought Facebook here thinking that, well, the market's going up. I'm just going to make so much money on this. And then look what happens, right? Well, you lost 20 points. This is why most traders fail, because they're not in sync with the market and they don't know how to properly apply these techniques and rules that we teach in our courses. Now, if you had the Pet D course, which we're offering you today at a deep discount, here's what you would have learned. You would have clicked on the Pet D on our platform, and rather than thinking you were in an uptrend, what did the Pet D tell us? It actually told you you were in a downtrend, that this was the beginning of a short-term downtrend, and that you should not have been buying right here. If anything, this was a selling opportunity. So had you taken advantage of this as a sell signal, guess what? You could have made a quick 16 points to the downside, potentially, if you held it on for the end of the day. And on top of that, you could have taken advantage of this buy setup right here for another 10 potential points. So that's roughly 25, 26 potential points that you gave up because you did not have the Pet D. This is the beauty of having this course. Don't think that it's enough to think that, well, I know what the trend is, so I can just apply this 2-bar pattern. You need to have the Pet D along with this technique and all of our other different edges and tools on the platform. Remember, this is the educational platform you've been searching for. This is the platform that teaches you how to kick your trading into overdrive. A year from today, you will have wished you became a member of this course. Why? Because one thing I failed to mention, you also have my personal email address. You can contact me whenever you'd like with any questions concerning whatever's on the platform or concerning anything you learned in the online course, the Pet D course. So this is really a great opportunity. Don't sit another year trying to become consistent. Take advantage of this great offer, become a consistent trader for the first time in your life, and become a student of ours in the Pet D course. So let's break this down. Our roadmap for any market, the Pet D course, along with 1 year free of the PTS Primo Charting Platform. This normally would cost you roughly close to $5,000. We're discounting it down to $29.95, okay? This is a very limited offer. And on top of that, along with the 1 year of the platform, we're also going to include payment plans. So if you can't come up with $29.95, you can still come up with a small deposit and be up and running with a payment plan. You can be a student as early as today, get the online course, get the Pet D, get the 1 year platform usage as early as today with a payment plan. You don't have to come up with the $29.95. But this is for a limited time only. So here's how to take advantage of this. Contact Pro Trader Strategies. You can either email them at this address right here or call them directly at area code 310-598-6677. In fact, I would highly recommend doing that right now. They have trained consultants manning the phones right now. They would be more than happy to establish a payment plan with you. So if you can't come up with $29.95, like I said, for a small deposit, they can work with you and have you up and running as early as today. Now, that link you see at the very bottom is the informational page. I have posted a live link on the chat box. If you go to the chat box on the far right-hand corner of the GoToWebinar column, you'll see underneath the chat category, there is a link posted there for you. So all you have to do is click that on, and it will take you to the sign-up page. Now, I promised I would reserve the last portion of today's webinar for any questions. So if you have them, just go to the question and answer box, type in what your question is, and I will answer it to the best of my ability. Okay, question. He says, what about if the first day after the inside bar is equal to it, but the next one pricing in the right direction? But the next one, I'm sorry, piercing in the right direction. Not really sure what you mean by piercing in the right direction. So if you say if the first day after the inside bar is equal to it, okay, but the next one piercing in the right direction. I'm sorry to this person who asked this question. If you could clarify this a little bit better, I'm not really sure what you mean here. But remember, what you're looking for is that inside day pattern, which I clarified for you. Then you want to see them, both those bars, bar 1 and 2, colored either green or both of them colored both red. That will tell you and determine which way you should be trading. Then you just want to make sure whatever bar number 2 is, if it's equal to the previous bar or if it's inside, whenever you trade above bar number 2, that's your entry point, okay? What will be the price of this platform after the first year? Good question. Now, the price is roughly going to be about $97 per month after the platform, okay? And that's still basically very inexpensive. But please remember, that's your decision. You're not locked into that. You have to just tell Pro Trader Strategies that, listen, I've learned enough. I know how to spot these on my own. I still have the information on how to trade this, so I know how to use this, so I don't need the platform. And that's fine. There's no obligation to stay on anymore after a year, but you can if you want to. Now, I personally have traded with platforms that have cost me close to $500 a month. So $97 is still rather inexpensive. But remember, that's something you won't have to worry about until 12 months down the road. Okay, so this is really a really great offer. Take advantage of this. And remember, you don't have to come up with $29.95. This is a very limited offer. You can still come up with a small deposit and still be up and running. Now, remember, someone is asking, how many techniques are there altogether? Well, there are literally dozens of techniques using the Pet D, and we teach you a lot of this in the course. But we just shared with you one. There are literally dozens of ways, which I talk about in the course, also which I talk about even on in our different webinars that I give from time to time. But you can't execute them, you can't apply them unless you have the Pet D. Because remember, once again, just like that example I shared with you on Facebook, if you think you're in sync with the trend, many times you're really not. And that's why you lose. I mean, think of it when you've bought something where you've had a losing trade with any strategy, with any system. Most likely, if the minute you bought it and it went down, or the minute you sold it and you went up, it just means you were out of sync with the trend. But most likely, if you had the PET D, the PET D could have helped you not to take that trade because it would not have been confirming that. So this is another great advantage of having the PET D, okay? Someone says, what if I want to use my current platform? What platforms can I apply the add-ons with? Remember, the add-ons are just the add-on to your platform that allows you to color the bars either green or red. So you can apply this to most of the major platforms such as TradeStation, Metastock, MT4, NinjaTrader, Sierra Charts. You can also use Thinkorswim. Yes, someone is asking, can I apply this with Thinkorswim? But there are a couple of alterations you have to make. It's not as simple as applying it straight on with MT4 or a TradeStation. But the beauty is our tech support does all of that for you. So there's a couple of changes you need to make, just alterations in the platform itself with Thinkorswim, but you can still apply it. Yeah. So remember, even if you have another platform, you can still use it on those other platforms. But I personally, that's one of the reasons why I developed the PTS Primo Charting Platform with Pro Trader Strategies, because we really made it simple. Let's say you have NinjaTrader, okay? Well, if you wanted to apply the PET D, you would have to go into you'd have to find where the indicators are. Once you opened up that box, then you have to search through all the indicators and look for the PET D. And once you find the PET D, then you'd have to click it on and apply it to the proper time frame. And then after that, you've already wasted 2 or 3 minutes. The beauty of the PTS Primo Charting Platform is that all you have to do is click on the PET D tab on the platform in the upper green strategies tab, and the colors will automatically change for it. So that's the beauty of it, okay? Let's see, someone is asking, does the 297 package have the PET D strategy? No, it doesn't. The PET D is not involved in a 297 package. These are some things that we usually do for Saturdays or for expos or summits that we teach at. But the PET D is one of our more advanced trading tools, and therefore you won't find it in the 297 package, okay? With the 297 package, you usually find a strategy along with another tool or the platform, but you won't get the PET D. The PET D is a little bit more advanced, so but I would still take advantage of it, because possibly for a down payment, a small payment plan, probably or close to that same $297 price, you can still be up and running. So this is a really great offer. Remember, these payment plans are only going to be offered for a limited time only. On top of that, you get a full year of the platform with all the other bells and whistles. Remember, this is 40 years of things that I've accumulated, trading techniques and methods and strategies, all at your fingertips. Now, there's absolutely no obligation. I would really highly recommend contacting Pro Trader Strategies if you're interested at all. There's no obligation, though. You don't have to purchase anything. Just call 310-598-6677. They have trading consultants manning the phones right now. They would be more than happy to come up with a payment plan for you, to show you what you'd have to come up with. They would give you a package you could work with, and you could decide for yourself. So this is what I would really recommend doing right now. They're there to work with you. They're not going to sell you anything. It's up to you, but you have to take advantage of this quickly, or else most likely this will go back up to about a $5,000 to $6,000 or $7,000 price range, okay? Getting 1 year of the platform along with the PET D. Okay, so this is a really great offer. Take advantage of it. It's something I use in my daily trading. As I said, I used it this morning, and I had a really nice intraday trade on the E-minis using this technique. So this is something you can use intraday. You can use daily bars. You can use on currency pairs. We have currency pair traders that trade with this technique around the world, okay? As we conclude now, I just want to thank you so much for attending, taking time out of your Wednesday. I hope you learned a little bit today on what our philosophy is and how we like to trade the markets. But most especially, as we take one last look at our disclaimer, I just want to say thank you so much for attending, but I look forward to all of you becoming students of mine in the PET D course, okay? Thank you so much. I wish you the best of luck, and I'll see you next week. Bye-bye.